Do you know 5 retirement withdrawal strategies that you need to help make the most of your retirement savings? If not, we're going to talk about each one of these strategies in our Tuesday tips, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tips, where today we are going to be talking about a very, very important topic for anyone who's trying to have an effective distribution strategy during their retirement years. How you take money from your retirement savings is going to make a huge difference to how long your money will last and how comfortable you're going to be during your retirement years. So today we are going to explore 5 retirement withdrawal strategies that can help you be more efficient with your retirement savings. So let's go ahead and jump into our lesson today. So the first retirement withdrawal strategy that we're going to discuss is the 4% rule. We've talked about this rule a lot, and it's always a rule that's going to be a general rule of thumb of how much money that you can take out of your retirement savings. Now, when it comes to the 4% rule, the rule states that you can withdraw 4% of your retirement savings in the first year of your retirement, and then you would actually adjust for inflation in every subsequent year. So when you look at this as an example, let's just say that you have $1 million saved for retirement. Now, you can spend 4% of that portfolio in the first year, which would amount to $40,000. And in the second year, if inflation happens to be 2%, you would adjust that retirement income to $40,800 to adjust for the inflation rate of 2%. Now, second smart withdrawal strategy is a bucket strategy. I like this strategy as well. Here, all you're doing is dividing your retirement savings into different buckets based on your time horizon and your risk tolerance. For instance, you may have a bucket for cash. That would be for short-term expenses or any type of emergencies that may come about during your retirement years. You also may have a bucket that's maybe for medium-term expenses. That can be built with bonds or maybe annuities as well. And of course, you would then have a bucket for long-term goals, and that would typically be funded with stocks or mutual funds. So the bucket strategy can be a very efficient way to spend your money in retirement and not have to take from one particular account, which could ultimately cause some sort of issue with your overall long-term retirement goals. Now, the third retirement withdrawal strategy that you might want to consider is what we call a dynamic withdrawal strategy. Now, with this particular strategy, it's very, very simple. All you're doing is adjusting your withdrawals based on the market performance and your portfolio value. So, for instance, if you have a great year, you might take out more money during that year and be able to do some things that you possibly could not do in the down years. Because in the bad years with a dynamic withdrawal strategy, you're going to be expected to spend less money from that portfolio. That's why it's called a dynamic withdrawal strategy, because it's going to be dynamic based off of what the value of your portfolio is doing at that particular time. Number 4 is a Roth conversion strategy. Now here, you're gradually converting your IRAs or your 401ks into Roth accounts over time. Of course, while you're doing this, you are paying the taxes up front on those converted dollars from the IRA or 401ks. Now, what this is going to potentially do is be able to help you control your future tax liabilities, because once those dollars are in a Roth IRA, you will be able to pull those dollars out tax-free. And if you're able to do that, you can end up maximizing your overall withdrawals from your retirement savings. Now, the last type of retirement strategy that we think could really help you extend your retirement savings is utilizing an annuity strategy. Now, when you're talking about annuities, you're talking about a financial product that really is designed to provide you with a guaranteed stream of income for the rest of your life, or a specified period that you actually choose. Here, you would take a portion of your overall retirement savings and place that into an annuity. Once those dollars are actually in the annuity, it could help you spend your money a little bit more safely in retirement. And also, it would help you create another reliable income source that you can combine with your other guaranteed income sources like Social Security, or if you are lucky enough to have a pension, to help cover some of those essential expenses that you do have in retirement. So the ultimate goal of actually having an annuity in place for a retirement withdrawal strategy is that it provides stability for your retirement income. And if you have more stability in your retirement income plans, then it would allow you to use the investment accounts that you have for your discretionary spending, which are the things that we want. Maybe you want to take a nice vacation. Maybe you like to go shopping, or maybe you just want to buy some things for the grandkids. If you're able to implement a withdrawal strategy with an annuity that provides that stability, you'll be able to utilize your investments for those particular things. So the moral of this video is that when it comes to what you need to do to have an effective withdrawal strategy for your retirement, just know it's always going to be based on your particular financial goals and your particular financial needs. So as we always say, it is very important that you speak with a competent financial advisor that can assist you with these particular strategies. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And we would also like to hear from you. Let us know what your thoughts are regarding this particular subject matter, and leave any questions or comments in the section below. And if you found this information to be beneficial, all that we ask is that you subscribe to this channel so it can continue to grow, like this video, and share it with others.